Where can Bitcoin's expected rebound go? We can observe the changes in the chips in the chart. To estimate the position of the rebound, we start from the daily line. We can find that this wave of decline is very violent and rapid. If we go to the 4-hour level, well, let's focus on our period of the fastest decline, and then compare our previous market conditions to observe the changes in his accumulation of chips. First, let's take this period of decline and pull out a VPVR. We found that the accumulation of chips in the current wave of decline. We can find that the calculation method of this accumulation of chips is different. Generally speaking, he only calculates a single K line. That is, at intervals of time. Then we pull this kind of VPVR, it uses price as the interval. So we can find that in the current whole wave of decline. In fact, almost all the volume energy or the peak value of the volume energy is maintained at the uppermost part of the entire wave of decline. You can find that it has 3 peaks in a row on the upper edge, including our red POC position. Then we are at the lower position, and you can find that the accumulation of its energy is far worse than what we accumulated on the top. From the horizontal accumulation of volume, we can know the change of his bargaining chips in this wave of decline. When we were at the top, there were many people who were trading. In fact, it does not mean that the people above sell a lot, because he only needs to have a trading volume in the transaction. The above must be one buy and one sell. So someone buys and someone sells. Then we are on the top. The trading volume at the top can indicate that. In fact, we have a large transaction volume at the top, and a small transaction volume at the bottom can indicate that the bottom is actually receiving orders. Is there a rare situation like this? Usually the rebound it produces is relatively weak. So we can expect our rebound this time to be very weak, because our demand below is actually not sufficient. If we replay to our in the previous few waves of declines of this level, we can find an amazing thing. If the chips are accumulated at the lower boundary of the decline, then we can find a rebound. Usually it will be more violent like ours. Can you review the decline in the FTX incident at that time? At that time, we fell in this wave. It directly fell by 28%. This is a very, very exaggerated decline. Well, let's take a look at where it rebounded in this wave of decline. Let's take a Fibonacci and let's calculate the ratio of his rebound. He is about to touch 0.5. That is, he rebounded to a position between 0.38 and 0.5. And rebounded immediately after falling. In fact, let's take a closer look at the accumulation of volume during this period of decline. I'm talking about the horizontal accumulation. Okay, let's cut the level down so that we can see it more accurately. Wait. Let's cut it to 4 hours later. Well, we can find out that our entire period of decline. If we observe the period of the most violent decline, we can find that the distribution of energy in the entire period is very uniform. You can find that it is very uniform. If we compare with the current period, compared with our current decline, this wave of decline can be accumulated at the top. The decline of our FTX event actually accumulated very evenly. This kind of accumulation can be expressed evenly. We will show it below. The demand is relatively strong, so our follow-up rebound will be relatively large. We can know the result from the measurement just now. Then we can observe whether there is a kind of sharp drop, but it is obvious. Our trading volume, from a horizontal point of view, is accumulated at the top. Some of us had a drop like this. It was here. When we got out of this drop, you can pay attention to the magnitude of its rebound. It's exaggerated. If we just draw the section of the plunge, of course, if we draw it in the traditional Fibonacci way, it should be drawn like this. But we only care about the section of our most violent drop. He nearly reached 0.618. And the magnitude of the rebound is terrible. When we fell, we started from the position of 58,000. The drop was $17,000, which is terrible. Then we should not underestimate the rebound. The rebound alone was $9,700, 23%. So our rebound during this period is very strong. We can take a closer look at the distribution of its volume and energy, and we can know it in detail. The above is the K-line accumulated below us. Let's take a look. Let's cut this chart to a smaller size and see how these red columns can accumulate. Let's open the VPVR account as well. You can find something, right? There is a clear gap between the accumulation of his quantity and the 2 periods of decline we just mentioned. His quantity and energy, including the POC position and the peak position, are all accumulated at the bottom. So our subsequent rebound will be gone. It is very, very strong. Although it is said that the plunge is our follow-up. He is indeed short. But our energy, if it is all accumulated at the bottom, then you can see that the magnitude of our follow-up rebound is very, very large. The sharp contrast is our current wave of decline. Our volume can be accumulated at the top. So I think our rebound will appear very weak. And we will follow the same. Let's take a look at the whole wave of the drop just now. If it comes to 382, it's around 27,000. If it's 0.5, it's 27,700. You'll think it's already tight at 382. Okay. Let's cut this side down a bit. In fact, in our previous videos, especially when we were falling, we talked about the low point of 25,000 that we inserted after the plunge. We are very, very likely to touch again in the next market. You can find that if we observe the market. He did come back in a few days. Even if he rebounded to more than 26,000 in the middle. 6. Wow, he still made up for the distance of more than $1,500. Let's take a look at what we did before. In the video we talked about, we mentioned that he would come back 5 days ago to step on the position of the needle tip. Well, you can watch this video. He is indeed doing this action now. After doing this action, in fact, we can take the short order that is placed at a relatively poor position, such as 28,000, and it will be a good profit stop point when he retests. Because it is difficult for us to predict. When it rebounds, will it eat up the opening price of your original short order? Let's cut the level and cut it down a bit. And then cut it to 4 hours. After 4 hours, yesterday's rebound was 1,500 knives. That's it. 1,500 knives if we cut it to 1 hour. We can find out. Well, we open an auto. In fact, we are already on top of a swap box that we formed below. He has been standing on it for a short time. So I think, if we break through the position of 27,000 in the next step, then our phase decline will come to an end. If we want to have the next wave of decline, we will have to wait for our rebound or the end of the shock. If the next wave of decline occurs, we can pay attention to it. If the rebound has a good chance, then we are worth it. In such a place, use a hammer to hammer an empty order. What about our rebound or the follow-up for the rebound? He has never clearly crossed 27,000. Then we are very, very likely to continue to fall. And this will be very dangerous. Especially for the current hand. If you still hold long orders or friends who say there are still stocks in stock, will be quite dangerous. Thank you very much. You are very welcome. You can like my video, subscribe and share. Turning on the little bell is the biggest support for me. Thank you very much. Bye-bye.